Welcome to the Deep Dive. Today we're going to be exploring the Indus Valley Annual Report 2025 by Blume Ventures.
It's an interesting report.
Yeah, it's like a State of the Nation report, but just for the Indian startup scene and the broader economy.
Right, and I think they try to position it as like a...
Yeah.
You know how everyone talks about Silicon Valley?
Right.
They want this to be like India's version of,
Yeah.
the
Indus Valley.
the report for the startup scene.
Yeah.
So there's a lot of really interesting stuff in there.
Yeah, and speaking of interesting stuff, they use this really interesting term, Indus Valley, to represent the whole startup ecosystem. So is that like India's Silicon Valley, or is it something different?
Yeah, it's a little bit different. They're kind of intentionally, I think, moving away from that geographically limited Silicon Valley image and trying to say, hey, India has a really long history of innovation. You think about the Indus Valley civilization, one of the very first civilizations on Earth, right? So it's more about a shared mindset of innovation and resilience, not just a place on a map.
I like that a lot.
Yeah.
And speaking of mindsets, the report says that India is now the world's largest derivatives market by volume.
Yeah.
That completely blew my mind. I had no idea.
Yeah, it's quite remarkable.
Yeah.
But there's a catch.
Okay.
The report also warns that, vast majority of retail investors in the derivatives market end up losing money. It's a high-stakes game that requires a certain level of, expertise and risk tolerance.
So maybe not something to jump into without doing your homework first.
Right.
Okay, well, that's just one of the many kind of surprising insights that we're going to be uncovering today.
Yeah.
We're also going to be exploring things like the explosive growth of quick commerce, whether India can build its own kind of AI powerhouse like China's, DeepSeek, and how the top 10% of earners are driving this consumption boom that's really reshaping the entire Indian market.
Yeah, India One, as the report calls them,
Right.
is a fascinating segment of the population.
Yeah.
And their rising incomes and their changing consumption patterns are having a ripple effect across the entire economy.
Okay, so before we get too far ahead of ourselves,
Right.
Let's take a step back and look at the bigger picture here.
Yeah.
The report kind of paints a pretty vivid picture of India's economic roller coaster over the past 5 years.
Yeah, it's been a wild ride, hasn't it?
It has.
From a COVID-induced recession
Right.
to this remarkable recovery that was fueled by a lot of government spending and those super low interest rates that we saw for a while.
Right, which of course then led to some pretty serious inflation.
Exactly. Things got so heated that the Reserve Bank of India had to step in and raise interest rates to cool things down.
Right.
And now, as the government kind of tightens its belt a little bit and consumption slows down, we're seeing growth taper off a little bit.
Right, so it's this complex dance between
It is.
managing growth and keeping inflation in check.
It is a balancing act.
Yeah. So what are the major long-term forces that are really shaping India's economic destiny? What's the lay of the land, so to speak?
Well, the report highlights a few key factors. I think one is that India is very reliant on consumer spending and its services sector,
Right.
which is different from China, where investment and manufacturing are much bigger drivers of the economy.
Right. And we've talked before about this whole like formalization trend.
Yes.
The shift from the informal to the organized economy. How is that playing out?
Yeah, it's happening steadily,
Okay.
though perhaps not as quickly as some would like. But you can see this in the rise of, branded products or the increasing number of businesses that are registered GST pays.
Okay.
It's a gradual transformation, but it's definitely happening.
But here's something that surprised me. The report says that Indians aren't saving enough.
Yeah.
What's the story there?
It is a bit of a paradox. Given India's long-standing reputation for thrift,
Right.
I think there are a few factors at play.
Okay.
One is the increasing availability of personal loans, which are often replacing traditional industry loans.
So people are more willing to borrow and spend than to save?
Well, it's more nuanced than that, I think.
Sure.
You also have to consider, the cultural preference for gold as a savings instrument. It's seen as a safe haven,
Right.
especially given the difficulties associated with using land as collateral. Property disputes and slow contract enforcement make land a less attractive asset.
So gold is perceived as more stable and reliable.
Exactly.
Okay.
And then there's the issue of human capital.
Right.
India faces a challenge with underinvestment in education and skills training,
Yeah.
leading to high youth unemployment, especially among educated young people.
Right.
It's a pressing issue, and the workforce needs upskilling and AI proofing to thrive in a world that's being transformed by technology.
It feels like we're at this critical juncture where technology is changing everything, and India needs to keep pace.
Yeah.
The report also digs into India's manufacturing sector, which hasn't seen the kind of growth that many had hoped for.
True.
Right.
There have been attempts to jumpstart the manufacturing sector.
Yeah.
With initiatives like import bans, tariffs,
Right.
production-linked incentives.
Right.
But the results have been mixed.
Yeah.
The report compares India's progress to Vietnam's success in attracting manufacturing and points to areas where India still needs to improve.
Okay, so it's a work in progress. What about this whole digital welfare state concept?
Yeah.
What does that mean for India?
This is where things get really interesting.
Okay.
India has created this incredibly sophisticated system of digital public infrastructure, or DPI.
Okay.
Think of programs like Aadhaar,
Right.
the national ID system,
Right.
and UPI, the mobile payments platform that's taken the country by storm.
Those have been hugely successful, haven't they?
Absolutely. They've transformed how the government delivers benefits and services.
Right.
Direct benefit transfers, reduced leakage. It's a game changer.
But even with those successes, are there any unintended consequences?
We'll take UPI's zero merchant discount rate model, for instance.
Okay.
It's been fantastic for consumers,
Right.
but it's putting pressure on payment providers' profit margins.
So a win for the consumer, but a challenge for the businesses behind it.
It's a balancing act, and that's what makes this ecosystem so fascinating to study.
Right now, the report spends a good chunk of time talking about India One.
Yes.
Who are these folks, and why are they so important to the overall story?
India One represents the top 10% of earners in India.
Okay.
They're the ones who are driving the demand for everything from, equity investments to premium experiences, travel, fine dining, luxury brands, you name it.
Right.
They're the fuel behind a lot of the economic growth that we're seeing.
Right, and that's a big part of what's fueling the equity market boom, right?
Wesley.
The report shows that domestic investors are becoming a dominant force in the Indian stock market.
They are.
But here's the question the report raises. How long can this domestic funding keep the market afloat?
That is a good question.
Especially with all those SIP cancellations we've been seeing lately, it does make you wonder if there are some cracks starting to show.
Yeah. There are always factors to consider.
Yeah.
It's wise to be aware of potential shifts.
Okay, well, we've covered a lot of ground here, but we've barely scratched the surface of this report.
Yeah, there's so much more to discuss.
Next, we're going to dive into the heart of the Indus Valley, the startup ecosystem itself.
It's a dynamic scene. Get ready for a wild ride.
All right, I can't wait. Welcome back to our deep dive into the Indus Valley Annual Report. Last time, we kind of set the stage with India's recent economic roller coaster.
Right. A lot of ups and downs.
Yeah, now let's zoom in on the startup landscape itself. Things are definitely heating up there.
Yeah, for sure. It's a dynamic scene. And the report, I think, does a really good job of giving us kind of that global perspective, comparing India's venture capital landscape to, those giants, the U.S. and China.
Right.
What's really striking, I think, is how each of these markets is reacting to the global slowdown. The U.S. seems to be kind of bouncing back pretty strong.
Yeah.
Fueled in part by this whole, explosion of AI funding.
Right.
China, on the other hand, was in a bit of a slump before their big AI breakthrough, DeepSeek, came along.
Yes. DeepSeek China's answer to ChatGPT, it sent shockwaves through the tech world.
It did?
We'll get to that a little bit later.
Yeah.
But for now, what's the story in India? Is funding flowing freely?
Well, you're seeing an uptick, but it's nowhere near the levels of 2021 and 2022.
Okay.
I think what's really holding things back is the lack of late-stage capital.
Okay.
Investors are being much more cautious with their money these days,
Right.
which means those mega rounds, those huge $100 million rounds, those are much harder to come by.
So it's a more, shall we say, mature funding environment.
It seems that way.
Yeah.
Yeah, less about, chasing the next unicorn.
Right.
And more about kind of, sustainable growth.
Right.
And I think this shift is playing out differently across the funding stages. So, for example, in seed funding, we're seeing this trend towards, fewer rounds, but larger checks.
Okay. So quality over quantity.
You could say that the report calls these larger seed rounds mango seeds.
Interesting.
Rounds exceeding $3 million.
Okay.
And they're becoming increasingly common.
Okay.
Especially when you have, experienced founders.
Right.
Or, what they call kind of top-tier operators.
Right.
Who can attract, bigger investments right from the start.
It makes sense if you've already proven yourself. Investors are more likely to bet big.
That's right.
What about the early stages of funding?
Yeah.
Is it getting harder for startups to kind of get that initial boost?
Right. That's where things get a bit tricky.
Okay.
There's a growing gap, I think, between seed funding and those later Series A and B rounds. Seed investors are getting very selective these days.
Okay.
Often focusing on, a smaller pool of what they consider to be, elite founders.
So what happens to all the other startups out there with great ideas, but maybe not that rock star founder pedigree? Are they being left behind?
Not necessarily. This is where we're seeing this new breed of investors step in to fill the void.
Okay.
Micro VCs. They're specifically targeting that early stage funding gap.
Okay.
Often specializing in particular sectors or working with, first-time founders.
Right.
Who might not have that long track record yet.
Okay. It's fascinating how the funding landscape is constantly evolving with new players and new strategies emerging all the time.
It is. It's a dynamic space for sure.
So we've got micro VCs kind of helping those promising startups bridge that funding gap.
Right.
But what about Series A and B rounds?
Yeah.
What are the trends there?
Well, we're seeing, stable check sizes.
Okay.
Meaning the average amount invested hasn't changed that much. But the number of rounds has dropped significantly. And it's taking longer to actually raise those rounds.
So it's a double whammy for startups.
It can be.
Fewer opportunities to raise funds and a longer, more grueling fundraising process.
It requires patience and persistence for sure.
Yeah. And to make matters worse, the time between funding rounds is steadily increasing.
That's right.
So startups that secure seed funding, they're waiting longer to raise their Series A.
Yeah.
Series A companies are facing longer waits for their Series B.
Yeah.
With all this talk of funding gaps and cautious investors, what's the picture looking like for late-stage funding?
Yeah.
Are those massive rounds that we used to hear about still happening?
Remember those headline-grabbing rounds?
Yeah.
$50 million, $100 million or more.
Right.
Those are much less common these days.
Right.
Late-stage funding has taken a significant dip, and that's a big reason why, overall venture capital investment in India is still below its peak in 2021.
So that dream of becoming a unicorn, a billion-dollar startup, is getting even harder to achieve.
It's certainly more challenging, but not impossible.
Okay.
And speaking of unicorns, the report has some interesting insights on that front. It actually challenges the official unicorn count.
Oh, really?
Claiming that, many companies that are boasting those billion-dollar valuations might not actually be worth that much.
Wait, are you saying there's some unicorn inflation going on?
Perhaps not outright fraud.
Okay.
But more like, inflated expectations.
Right.
Blume did this deep analysis and found that out of the 117 companies that are considered unicorns in India, only around 91 actually meet that billion-dollar threshold based on their analysis.
So it's a good reminder to look beyond the hype and really scrutinize those valuations.
Yeah, absolutely.
But hey, at least some companies are making it to the public markets.
In
fact, 2024 was a record-breaking year for Indian IPOs.
It was.
Both in terms of the number of listings and the amount of capital raised.
That's right.
That's a positive sign.
It is.
What's driving this IPO boom? Is it a sign of confidence in the Indian market?
I think there are a few factors at play.
Sure.
Regulatory changes have made it easier for companies to go public in India. And the strong performance of recent IPOs has certainly boosted investor confidence.
It's like a success breeds success scenario.
You could say that.
And what's really interesting is the rise of this SME IPO market.
Yes.
Which is specifically designed for, smaller and medium-sized enterprises.
Right.
It's opening up this whole new avenue for startups that may not be aiming for those mega valuations,
Right.
but still want to access public markets.
Exactly.
So there are more options and more opportunities for startups to grow and scale.
Absolutely.
But let's shift gears for a moment and dive into some specific sectors. The report has some fascinating deep dives, starting with this whole quick commerce craze that's sweeping India.
Oh, yes.
Seems like everyone's talking about it these days.
Quick commerce, the promise of groceries at your doorstep in minutes.
Right.
It's definitely reshaping the retail landscape as we know it.
And the report calls it India's fastest growing industry segment ever.
Ever.
We're talking 24 times growth in order value in just 3 years.
It's remarkable.
Those are some mind-blowing numbers.
They are.
The players in this space, like Blinkit, Zepto, Instamart,
Right.
they're expanding at this incredible pace, building out these vast networks of dark stores, pushing into new cities all the time.
That's right.
For those who haven't encountered them yet, can you explain what dark stores are?
They're essentially mini warehouses designed for rapid fulfillment. They stock a limited range of products strategically located in densely populated areas to enable those super fast delivery times. It's all about optimizing the supply chain for speed.
It's fascinating how they've turned the traditional retail model on its head.
Yeah, it's a whole new game.
But what's driving this incredible success? Is it just the convenience factor, or is there more to it?
Well, the report highlights, I think, several key factors. There are the obvious ones.
Right.
Low labor costs, the high population density in Indian cities.
Right.
And the fact that India seems to be leapfrogging the traditional evolution of modern retail.
Leapfrogging meaning?
Meaning instead of going through that gradual evolution of, supermarkets and big box stores like many developed countries did, India is going straight to this hyper-convenient world of on-demand delivery.
Right.
It's like skipping ahead a few chapters in the retail playbook.
I like that analogy.
Yeah.
And it's not just about convenience. The report points out that quick commerce can actually be cheaper for consumers.
Right.
Thanks to aggressive discounting strategies.
Exactly.
It's a game changer for sure.
It is. It has shaken things up.
Yeah.
And the competition is only getting fiercer.
Hmm.
We're seeing these, established e-commerce giants like Flipkart and Amazon jump into the fray trying to catch up with those 10-minute delivery times.
It's like a race to be the fastest.
It is.
But with all this hype, do you think it's sustainable in the long run?
That's a good question.
The report does raise some interesting questions about the future of quick commerce.
It does. There might be a bit of what we call irrational exuberance.
Irrational exuberance, that classic term for when things get a little too frothy.
Exactly.
Okay, so the report takes a closer look at some of those rosy growth projections.
Right.
And highlights some potential red flags to consider.
Yeah.
Like what are some of the challenges that quick commerce companies might face going forward?
Well, one of the big assumptions is that the number of monthly users is just going to keep skyrocketing forever.
Right.
But if you remember our discussion about India One and how their growth is more about deepening than widening.
Well, meaning the top tier of earners is getting richer. Yes.
But the overall size of that group isn't expanding as rapidly as some might assume.
Precisely.
Yeah.
And if quick commerce is primarily targeting those higher income consumers, there's a limit to how much the user base can actually grow.
It's a good reality check for those who think this sector can defy gravity forever.
Indeed.
And then there are questions about, the economics of dark stores themselves.
Yeah.
Is there enough density and demand to support the projected growth of these mini warehouses?
It's a valid concern.
So while the quick commerce story is definitely compelling,
it is.
There are some big what-ifs to consider.
There are.
It'll be interesting to see how things play out.
Absolutely.
Speaking of what-ifs, let's move on to our next deep dive, artificial intelligence.
Okay.
The report tackles this big question. Can India create its own AI superstar like China's DeepSeek? Okay, now we're getting into the really exciting stuff.
Yeah.
DeepSeek, for those who haven't been following along, is China's version of ChatGPT.
A foundational AI model that's transforming entire industries.
It's a game changer.
Yeah.
And the report explores why India hasn't had its own DeepSeek moment, at least not yet.
So why is China seemingly ahead in this AI race? What factors have contributed to their success?
Well, for one, China has made massive investments in AI research and development.
Okay.
They've also got a strategic advantage when it comes to accessing GPUs.
Right.
Those specialized chips that power AI algorithms.
Right.
And we can't forget the role of government support in fostering China's AI ecosystem.
So it's a combination of resources, strategic planning, and a bit of national pride, perhaps.
You could say that.
But here's the interesting part. The report doesn't rule out the possibility of India catching up. Really, what makes them think that India could still be a contender in this AI arena?
Well, there's a growing sense of momentum, I think.
Okay.
The government has recently announced some significant initiatives to boost India's AI capabilities.
Okay.
Things like funding for research access to GPUs at discounted rates, and a push for what they're calling AI sovereignty.
AI sovereignty, meaning India wants to control its own AI destiny, not be reliant on technologies developed elsewhere.
Exactly.
Yeah.
And the report highlights some of India's unique strengths. Things like, its vast pool of talented engineers.
Right.
And a history of what we call frugal innovation.
Right.
Remember the success of India's space program, ISRO?
Yeah.
They achieved some remarkable feats on a shoestring budget.
Right.
So the thinking is that India could replicate that kind of ingenuity in the AI space.
It's certainly within the realm of possibility.
It is?
And while we wait to see if India can build its own foundational model,
Yeah.
there are already some pretty impressive consumer AI success stories emerging.
That's right.
Can you give us some examples? What are some of the exciting things that are happening in the Indian AI scene?
Well, there are startups leveraging OpenAI's technology to create some really innovative tools. Think video generation platforms that can create videos from text prompts, or AI-powered presentation makers that can help you craft compelling presentations in minutes.
So even without its own DeepSeek, India is finding ways to ride the AI wave and make its mark.
Absolutely.
It speaks to the adaptability and entrepreneurial spirit of the Indus Valley.
Yeah, it does.
And speaking of adapting and innovating, let's move on to our next section, Indus Valley playbooks.
Okay.
This is where the report gets into the nitty-gritty of how Indian startups are tailoring their strategies for a market that's unlike any other.
Right.
I'm intrigued. What kind of playbooks are we talking about here?
Well, the report contrasts what they call the historic approaches
Okay.
with what they call the evolved and emerging strategies.
Yeah.
And it's fascinating to see how the game has changed over time.
So what was the OG playbook for Indian startups?
Yeah.
What did success look like in those early days?
Back then, it was all about taking a proven Western product
Okay.
and adapting it for Indian tastes. This usually involved things like, language localization, some design tweaks,
Right.
but essentially, the same core product.
A sort of copy and paste approach, but with an Indian twist?
You could say that.
Yeah.
But as the market matured, that playbook started to evolve.
So what did startups realize they needed to do differently to truly succeed in India?
I think they realized that to truly win in the Indian market, they needed to go beyond those superficial adaptations.
Right.
They had to re-engineer products,
Okay.
taking into account Indian user behavior,
Right.
price sensitivities, even the impact of things like, Jio's cheap data plans,
Right.
and the widespread adoption of UPI payments.
So it became about understanding the Indian consumer at a deeper level.
Exactly.
And building products that truly resonated with their needs and their habits.
That's right.
And that's led to the emergence of what the report calls this emerging playbook.
Yes.
This is where startups are rethinking products from the ground up, focusing on what they call the job to be done for the Indian consumer.
Exactly, the job to be done.
Job to be done. That sounds intriguing. Can you elaborate on that?
It's about understanding the core problem
that
the customer is trying to solve.
Okay.
It's about going beyond superficial features
Right.
and really getting to the heart of what motivates the customer.
I like that.
And the report gives some great examples of how startups are applying this playbook in really innovative ways.
Okay, give us some of those examples. What are some companies that are doing this really well?
Well, one example is Stage,
Okay.
an entertainment platform that's figured out how to produce ultra-low-cost content. That's incredibly popular with India, too.
Right. That's that aspirational class we talked about earlier.
That's right.
Yeah.
Those folks who are driving a lot of the consumption growth that we're seeing.
Right.
Stage has really cracked the code
Okay.
by re-engineering their content creation process. They use, standardized story tropes and templates.
Right.
They work with, local content creators who are willing to work for lower costs.
Right.
And they plan their shoots meticulously to ensure quick turnaround.
So it's about efficiency and understanding what resonates with that particular audience.
Precisely.
Another great example the report gives is Kaleidofin,
Yeah?
a fintech company that's reimagined the credit rating system
Yes.
for both India 2 and India 3,
Right.
those at the bottom of the pyramid.
That's right.
So they're making financial services more accessible to those who traditionally haven't had access.
That's the goal.
Okay, how are they doing that?
Well, they've developed this innovative credit rating system
Okay.
that goes beyond those traditional credit bureau scores. It takes into account a wider range of data points, including things like, mobile phone usage, social media activity.
It's like using alternative data to paint a more complete picture of a person's financial trustworthiness.
Exactly. And it's allowing Kaleidofin to extend credit to people who would have been excluded by traditional lenders.
It's a powerful example of how technology can be used to drive financial inclusion.
It is.
It's inspiring to see how these startups are finding creative solutions to address India's unique challenges.
It is.
And the report highlights two key features, I think, that are becoming increasingly important in this emerging playbook.
Right.
Voice and microtransactions.
Right. Voice and microtransactions.
Okay, let's break those down. What do they mean in this context?
Well, voice refers to voice-based interfaces.
Okay.
Like those used in apps like FRND, AstroTalk, even Local. They're finding that India 2 consumers and many India 1 consumers as well are willing to pay for one-on-one voice conversations.
So it's not just about texting and chatting anymore. It's about that personal connection through voice.
Exactly.
Yeah. Okay. Interesting. And what about microtransactions? How are they changing the game?
This is about enabling small-ticket purchases within apps and platforms.
Right.
And it's particularly effective, I think, with India 2 users who may not be comfortable with large upfront payments, but are happy to spend, small amounts frequently.
Right.
Think about, pre-filled wallets that can be used for gifting or in-app purchases.
So it's about aligning with the spending habits of that target audience.
Exactly.
And making transactions seamless.
That's right.
The report gives a great example with Voice Club.
Yeah.
A voice-based social platform that leverages both voice and microtransactions.
That's right.
So it's like a social network where you connect with people through voice.
Right.
And you can use those microtransactions to support creators or access premium features.
Exactly.
It's a great example of how startups are blending technology and business models.
It is.
To create these compelling experiences for India, too.
Absolutely.
It's clear that the Indus Valley is this hotbed of innovation.
It is.
Constantly adapting and evolving to meet the needs of the Indian consumer.
It's a dynamic space for sure.
It's not just about products and services, though, right?
Right.
The report also delves into how startups are reshaping the Indian advertising landscape.
That's right. It's a fascinating area to explore.
Yeah.
Startups are disrupting the traditional advertising model in some pretty significant ways. One way is by bringing this fresh, often irreverent perspective to celebrity endorsements.
So no more stuffy, overly formal ads with celebrities looking like they're on a pedestal.
Exactly.
Okay.
Startups are humanizing celebrities, making them relatable, even poking fun at them. It's about creating shock value and cutting through the clutter.
Who's behind this shift? Is there a new breed of creative talent that's driving this change?
Well, the report highlights the influence of this new wave of ad agencies.
Okay.
Many of them founded by former members of comedy collectives.
So comedians turned ad gurus. That's a fascinating twist.
It is.
Yeah.
They're bringing their comedic sensibilities to the world of advertising.
Right.
Creating ads that are funny, edgy, and memorable.
Yeah. It's a brilliant strategy, I think, for startups that are looking to make a splash and stand out from the crowd.
It's all about differentiation.
And it's not just about the creative side.
Yeah.
Startups are also changing the way advertising agencies operate.
Yes.
Inspired by Zomato's example,
Yes.
many startups are setting up their own in-house agencies.
That's right.
So they're cutting out the middleman and taking control of their own brand messaging.
Exactly.
It gives them more flexibility, control, and agility.
Absolutely.
It's a bold move that's shaking up the advertising industry.
It is.
But it's not just about tactics, is it?
Right.
The report also explores how startups are changing the very currency of trust building in advertising.
That's a really important point.
Yeah.
They found that the way trust is mediated through advertising is actually diverging between India 1 and India 2.
Okay, can you explain that a little more? How is trust being built differently for these two segments?
Well, for India 1 consumers, those affluent, discerning shoppers, trust is built by highlighting product quality.
Okay.
Using clever copy and creating, high-quality content that showcases the brand's expertise.
So it's about appealing to their rationality and their desire for, premium experiences.
Exactly.
But for Indie 2 consumers, the trust factor is heavily influenced by celebrity endorsements.
It is.
It makes sense they're looking to those aspirational figures as a guide.
Precisely.
Yeah.
It's a fascinating example of how startups are tailoring their messaging to resonate with different segments of the Indian market.
It's clear that the Indus Valley is not only disrupting products and sources,
Right.
and also rewriting the rules of advertising.
Absolutely.
But let's talk about a challenge that Indian startups are facing, this issue of returns.
Yeah.
It's a problem that's been plaguing e-commerce for a while now.
It has.
Why are returns such a big problem in India specifically?
Yeah.
What's driving these high return rates?
Well, the report dives into the numbers and highlights some key reasons.
Okay.
First, there's the prevalence of cash-on-delivery orders.
Right.
Customers who opt for COD are statistically more likely to return items.
Why is that? What's the connection between Sayi and returns?
Well, think about it this way. When you pay in advance,
Yeah.
you've already made a commitment to the purchase.
Right.
But with Saigi, there's less of a psychological barrier to returning something.
It's like the try before you buy mentality taken to the extreme.
You got it.
Yeah.
And then there's this practice of bracketing, which is rampant in the fashion industry.
Bracketing. I'm not familiar with that term.
It's when customers buy multiple sizes or colors of the same item, try them all on at home, and then return the ones that don't fit or that they don't like.
Okay.
It essentially turns their home into a fitting room,
Right.
but at the expense of the retailer.
I see how that would be a problem.
It's a logistical nightmare for businesses.
Yeah.
High return rates mean increased shipping costs,
Right.
more inventory management headaches, the potential for damage or spoilage of goods.
Right. It's a drain on resources and profits.
It is.
So what are companies doing to address this challenge? Are they just accepting these high return rates as the cost of doing business in India?
Not at all.
Okay.
The report highlights some really innovative solutions that startups are developing to combat this return rate epidemic.
Okay. Tell us about the solutions. What are startups doing to fight back?
Well, they're getting strategic on multiple fronts.
Okay.
First, they're trying to nudge customers away from COD and towards prepaid orders.
How are they doing that? Is it just about offering discounts for prepaid orders?
It's more nuanced than that.
Okay.
They're introducing a bit of friction into the SHUD process.
Okay.
Some companies are charging extra for COD orders, while others are requiring customers to pay a small advance to confirm their purchase.
Okay.
It's about making COD as slightly less attractive and encouraging customers to think twice before choosing that option.
So it's not about eliminating Sakkad altogether, but making prepaid orders more appealing.
Exactly.
Is it working?
The data suggests it is.
Okay.
The report cites data showing that Sakkad orders are trending downwards, particularly in higher-tier cities.
That's encouraging. What other tactics are startups using?
They're also focusing on better address management.
Okay.
Remember our discussion about India's notoriously complex addresses?
I do.
Well, startups are realizing that poor address quality
Right.
is a major contributor to returns.
Because if the delivery person can't find the customer,
Right.
the order is more likely to be returned. It's all connected.
Exactly.
Okay.
So startups are investing in technologies
Uh-huh.
to improve address accuracy
Okay.
and ensure that those deliveries are successful. They're even using AI-powered tools to verify addresses and flag potential problems
Right.
before the delivery is even attempted.
It's about tackling the problem from both ends, reducing the likelihood of returns in the first place,
Right.
and making sure those deliveries go smoothly.
Precisely.
And when it comes to returns that do happen,
Yeah,
startups are finding creative ways to minimize the impact.
they are.
So what are they doing to make returns less painful for both the customer and the business?
Well, instead of simply offering refunds,
Uh-huh.
they're encouraging exchanges.
Okay.
This keeps the customer engaged with the brand
Right.
and reduces the likelihood of lost revenue.
Smart move.
Some companies are offering store credit or gift cards instead of cash refunds.
Okay.
This incentivizes customers to make future purchases
Right.
and helps mitigate the financial hit of a return.
It's about turning a negative into a positive.
Exactly. Host speaker.
Welcome back to the Deep Dive. We've been on quite a journey exploring India's economic landscape and the vibrant Indus Valley startup ecosystem.
It has been a fascinating exploration, hasn't it?
It really has. Now it's time to step back and reflect on some of the key insights and maybe ponder some of the bigger questions raised by this Blume Ventures report.
Yeah, so much to unpack and consider.
There were so many aha moments for me while reading this report.
Yeah.
For example, the sheer size and volume of India's derivatives market just completely blew me away. I had no idea so much action was happening in that space.
Yeah, it's remarkable, isn't it? It really highlights the increasing sophistication of Indian investors.
It does.
But as we mentioned earlier, the report also cautions us to remember that, the vast majority of retail participants in the derivatives market actually lose money.
Right.
It's a high-risk, high-reward game that requires careful consideration and a certain level of expertise.
Definitely a case of investor beware.
Yes.
What else stood out to you from the report? What really got you thinking?
Well, the story of quick commerce is particularly compelling, I think.
Yeah.
It's fascinating to see how this sector has just exploded in such a short time, transforming the way people shop for groceries and beyond. But it's also a reminder, I think, that even the most disruptive innovations are subject to the realities of the market. Those questions about irrational exuberance and the long-term sustainability of the quick commerce model are ones we should be paying attention to.
I agree. It's easy to get caught up in the hype.
Yeah.
But it's important to remember that not every innovation is a guaranteed success story.
Sure.
We also spent some time talking about the AI landscape and how India is positioning itself in this global race.
Yes.
This emphasis on AI sovereignty and the idea of leveraging India's unique strengths really struck a chord with me.
Yeah, it's a fascinating dynamic.
It is.
And the report seems optimistic about India's potential to catch up in the AI race.
Yeah, I'm personally curious to see if India can develop its own foundational AI model to rival China's DeepSeek.
Right.
It feels like the pieces are in place, but it'll take a concerted effort, I think, from the government, the research community, and the entire startup ecosystem to make it happen.
It's a challenge worth pursuing.
I know.
And one that could have a profound impact on India's future.
Right. We also can't overlook some of the challenges that Indian startups are facing. The report doesn't shy away from discussing those things like the issue of high return rates in e-commerce.
Yeah, that's an ongoing challenge.
It is.
But I'm encouraged by the ingenuity and creativity that startups are bringing to bear on this problem.
Yeah.
From nudging customers toward prepaid orders to experimenting with try before you buy options. They're finding ways to turn these challenges into opportunities.
It's a testament to the resilience and adaptability of the Indus Valley ecosystem.
Absolutely.
There's a real sense of problem solving and innovation that runs deep.
It does. If I had to sum up the main message of this report, I think it's a call to action for both investors and entrepreneurs. Investors need to recognize that the Indian market is unique with its own dynamics and complexities.
Right. It's not just a smaller version of Silicon Valley.
Exactly. And entrepreneurs need to embrace those complexities and develop strategies that are tailor-made for India. It's about understanding the Indian consumer at a deep level. And leveraging technology in really innovative ways. It's about understanding the nuances of the market, recognizing the challenges, and embracing that spirit of Jugaad. That uniquely Indian way of finding creative solutions to overcome obstacles. The Indus Valley is brimming with opportunity, but it's not without its challenges. Those who can navigate both will be the ones who ultimately thrive.
One final thought from the report that really resonated with me was the suggestion that India won, that affluent top 10% of earners might actually become a developed economy before India as a whole reaches that status.
Yeah, that's a fascinating and potentially troubling proposition.
It is. It raises some crucial questions about economic inequality and the potential for a widening gap between the haves and the have-nots.
It does.
Exactly. Will this create new opportunities or exacerbate existing inequalities? What role should startups and policymakers play in shaping a more inclusive future?
Big questions.
These are questions we need to be grappling with as India continues to evolve.
They are indeed. This report is more than just a snapshot of the Indian startup ecosystem. It's a springboard for deeper conversations about the future of India itself.
This has been an incredible deep dive, and I encourage all of you listening to check out the full Indus Valley Annual Report 2025 by Blume Ventures.
I agree.
It's a must-read for anyone who's interested in the Indian economy, the startup world, or the forces that are shaping our collective future.
It's a thought-provoking read for sure.
It is. Thanks for joining us on this journey of exploration and discovery.
Thanks for having me.
Until next time, keep learning, keep questioning, and keep diving deep.